Hello and welcome back to Bold TV. I'm joined today by our featured entrepreneur, Dean Sterrett. Dean is a friend of mine and he's the co-founder of LEX Markets. Welcome, Dean.
Thanks for having me, Phil.
What's up, brother?
How you doing?
I'm good. Now, what is LEX? Tell me, what does LEX do?
Yeah, so LEX is a real estate investment platform. We allow investors of all levels to invest in real estate, and it's really for both retail as well as institutional groups. So you really get to invest alongside both, and you're investing in a single real estate property. So you can invest in your neighborhood, you can invest in areas where you think it's up and coming, you can really pick and choose exactly what you're looking for.
So what's an example of a property that you may have on your platform? So the way I understand it, you have an app, you have a trading platform, people can buy into specific properties. What's an example of a property?
Yeah, so we have a couple properties that you can check out and indicate interest. They haven't been qualified. There's a lot of SEC rules around that. You can check them out, but we're working with a bunch of owners ranging in asset classes from large multifamily, so big apartment buildings, to industrial, kind of, like, I guess that's the word for it.
New York City,
yeah.
One of those that I've seen that you guys have had in the works, will it be New York City high rises that people can?
Yeah, so we're working with New York City high rises, but we also really want to do a geographical distribution. So we're working with a parking garage in Portland, Maine, but we're also working with a transportation hub in Milwaukee. We're working with high rise in Austin, Texas. We're working with a lot of stabilized in a lot of good areas, kind of.
And the way that it works is people can buy into it, and then they'll get a monthly return on the money that they. How does that work?
Yeah, so as rent comes in, it gets distributed to the shareholders in the same way it does, with Apple and their dividends. So it's going to be quarterly payments, and you should have some pretty good predictability because tenants pay their rent on time.
Leases,
yeah, exactly.
Leases, and you know exactly what's going to get paid. Unlike a business where iPhone sales can go up and go down, but the long-term leases.
The long-term leases are, usually pretty good. Yeah,
gotcha.
Exactly.
All right, so you guys have gotten to the point now where you've done a lot of big things in the past few months. You made a partnership with the NASDAQ to power your real estate trading platform. Yep. You guys have raised how much money now?
We're currently closing our second round, and not sure what that number is going to come to.
Well, I've seen it publicized. I'm sure I can say it. I think it's in around the $4 or $5 million neighborhood. Can you confirm, deny?
So our first round was around $4 million, and that was led by Graycroft Ventures, one of the really great VC firms, and they've been super helpful with our development as a company, as well as Thor Equities, which is a massive real estate private equity firm located here in New York.
Now, because of this leads me to my next question. Yeah. Why did you? I know you started this with your brother. I do my business with my de facto brother, my nephew, so I know how that feels. But what made you guys want to start LEX?
So my brother was working in a real estate private equity firm, and he was seeing all the deals that essentially very few people get access to. Let's just put it that way. You have to know somebody, or the check sizes are a little bit prohibitive.
Right.
Yeah, exactly.
Check sizes are high, the returns are high, and it locks out a lot of people who can invest.
Exactly. It's not really a secret that some of the best.
That's what it is.
Yeah. Anyway, so he was working on deals that he couldn't even personally invest in, and that's frustrating. And I wanted to invest in real estate. I had worked at a hedge fund for a little bit. And so, kind of the idea of real estate having such high transaction costs, how can we bring that down and bring value to the real estate owners that way? And then also at the same time, can we use that to bring access to investors? And we put it together. We figured out a marketplace is one of the most efficient ways to transact, and so we built a marketplace, and you can now trade fractional shares of a specific building in the same way you could, a specific stock.
What's the difference between this and a REIT, a real estate investment trust, that you can buy right now on any stock exchange? What's the difference between this and that?
Well, there's some tax things, but I'm not going to go into that.
Right. Just basically for an investor, the difference is...
Sure. Well, you just talked about, ETFs and the S&P 500. And the S&P 500 has recently gone up, as the graph showed on the TV I was watching. And the FANG stocks were really contributing to that.
Yes.
In the same way, REITs give you exposure to a large diversity, and I think have an important place in people's portfolios. But also at the same time, what real estate can do is, sometimes you just want to buy that Apple, and you don't want to buy the S&P 500,
right.
or you really believe in Netflix, but you have some concerns over Facebook. It really allows you to do that. And as we've seen in COVID times, real estate is constantly evolving. Maybe you believe that everyone's fleeing San Francisco and going to Austin, Texas.
Austin, Texas, right.
So
you can actually effectively capitalize on trends.
Yeah, exactly. Whereas REITs, there just aren't enough. And the fact that they're, almost index funds or ETFs, you're really investing in both the management company,
right,
and you can't really pick the specifics.
Dean, this is incredible. Everybody follow him at lex-markets.com.
I think, yeah.
Yes. All right. Thank you for being here, Dean.
Yeah, absolutely.
All right.